Good evening, everyone. How about some strawberry champagne on ice? I welcome you to the Money Date. My name is Anna, and I'm excited to be here. So that does sound fantastic, but we are better talk about what you're going to do with your tax refund if you are one of those lucky folks this year who actually got a refund. Now, don't think that you aren't lucky if you didn't get one. Perhaps you did a better planning for that. Or don't feel that you are so unlucky because you have to pay taxes. So it all is relative to how you look at it. But I want to dive into thinking about, all right, I have this windfall. What do I do? How do I make sure that the money that comes to me, right? And what are the planning strategies you can put in place now? Because guess what? Next year, 2019, there's going to be a tax season again. You're either going to have to pay or you're going to have to get a refund. So what can you do better? But before we get into it, you guys know what Money Date is for. Money Date is for us to get together and check in with ourselves. How has been your week? That's question number one. Now, this is a money show, so you guys know I love to talk about the financial piece. What is happening? Hi, Amy. Good to have you here. So, the 3 things that I ask you to track from week to week, and it doesn't get old because it should be exciting. And if it doesn't, let me know. I'll see what I can add. What kind of juice can I add to your excitement? So, 3 things. We're going to need to figure out what our expenses have been for the week. We need to know what income has come in the last week. We need to know and keep track of our savings goals. And my friend Amy, who's also a financial planner on watching, can agree that if those basic 3 things is something you can keep really close eye on, that kind of gives you the foundation, right, for having a solid basis that you can build on a top with all the rest of the financial and money related questions, because things get complicated. So I want to challenge you to start doing weekly check-ins. Use my idea of a money date. There's lots of different tools how you can do that, but at the very minimal, what your expenses are for the week, right? Because it's so much easier to make sure that you're tracking a small amount of data. What your income is, if you're on variable income, or even if you just get a paycheck every 2 weeks. Like, what's the net coming into your account? And how are you tracking against your savings goals, okay? I cannot emphasize enough about these 2 points. Now, this is just a reminder, and I hope you do the work, because I do. Before I get on the money date with you, I have to see where I stand, and because I deal with clients all day long, I have to pause and reflect and give myself time to see how things are going on for me. So this is your time to get on this. Now, I want to get into the actual topic of our discussion today. But before we do that, one of the things I'd like to also reflect on is, and I want to make sure my music isn't too loud here. I also want to reflect back on what has been yes, I agree, Amy. Finance is a pyramid. So if you can think of it this way, right? Maybe that's more like it, right? So we want to build this bottom here because that's the most precious part of the pyramid. So I like that analogy. Thank you. So reflecting back, now I am a big fan of gratitude, okay? And I'm also a big fan of tying in what's going on in our life to how we respond and react and how we treat our finances. So I want to pause and have you think about what has been a really awesome in the last 7 days, right? And so my practice is that I write a gratitude journal every night. I have to think about 10 things that I'm grateful for. Obviously, there are some things that are all the time the same, right? That's just given. But it does get a little challenging if you have to come up with 10. Now, I'm only asking you for 1. I'm going to share with you what I found to be the most sort of gratifying and important thing that happened over the last 7 days for me. But I want you to think about yours and share it. That would be awesome too, because I'm curious to see what are you grateful for. So here's mine. It's very simple, right? And it took me a little bit of time to think about. So this past weekend was the first weekend And it's not a complaint. I'm actually grateful for this, but it was the first weekend that I actually got to spend at home. Hi, Steve. Thanks for hopping on. So I've been traveling pretty much all February, and it was the first weekend I was home, and I was able to do my laundry. I was able to decompress, recharge, so that I can start the next month, which is, well, the next couple of weeks, which are going to be pretty intense with travel as well. Now, these little small things, right, add up. It's not always about money. It's not always about dollars in your bank account. That's important. It's the ultimate goal. But what's important is how you feel about it. So if for me, that was a really important thing. I didn't want to do anything. I didn't want to go anywhere. I just wanted to sit on my own couch, right, and do nothing. And it felt really good. So when you think about the moments, right, that's the idea about the gratitude. The moments of time, right, or experiences that actually make you feel good. That's the ultimate goal, all right? Because money will help you get there. So one of the ways to relieve stress, right, and I know that all of you have it. There's just no way, right? That's one of the tools that I found to be useful for me. So think about it, because it does relate to what we do here. It does relate to how you talk to your friends, what relationships you have with yourself, first of all, what relationships you have with your loved ones, right? And it all kind of ties in together. So I challenge you to think about your money wins. It is all closely related. So Amy is sharing that, oh, all right, so you're down in Florida. So yes, definitely thankful for having a fun weekend with friends at the beach. Lots of sunshine, $0 spent. Isn't that nice? Right, some things are just priceless. Well, you know what? The sunny California that I chose for where to live, and normally this part of the year is nice, but we've been getting a lot of rain, so not as much sunshine. But I'm grateful for that, because we need rain. Anyway, my friends, all right, let's get to the actual meat of the subject. I appreciate you sharing. Thanks so much. This is all. It's actually cool to see what others value, right, and what they're grateful for. It could really be anything. It doesn't have to be anything specific, right? Anything is great. So, all right, I want to talk to you about now. If you found yourself in the position that you have tax refund coming in, I had a client earlier today who came in and said, "I am so happy. I'm going to get $25,000 back on my tax refund," and I don't know what kind of look I had on my face. They were first smiling, and then they're like, "You aren't looking really happy." And I wasn't, because, I mean, it's great. They need to put this money to work. These clients need really bad to establish an emergency fund. But the idea is that you shouldn't be getting this much money back unless, I don't know, unless there's a very unusual circumstance. Okay, so the first thought is, all right, congratulations, you got your refund back. Hopefully it's not as huge as this amount. Or if it's more, we need to do some planning. This is where I'm getting. So the first step is, how large is large for you, right? Because it's all relative. But the idea is, if you getting a refund, that probably we need to think about adjusting some of your withholdings. Now, this is if you have a steady paycheck and you're getting a W-2, then you can adjust the withholdings. It works a little bit differently when you are getting paid through a 1099, right? When you're a contractor, you have your own business. Perhaps you do not have a check coming in through a payroll, and there's opportunity to have your taxes deducted. You can probably manage that as well with estimated quarterly payments. Now, the idea is that when you are getting a refund, that means you paid throughout the year, right? And so now that money is coming back to you. Now, what I want you to think about is the opportunity cost, right? Or the time you've lost by not using that money, okay? So there's two sides to this equation. Yes, you can get a refund and then turn around and do something good with it, or could you perhaps use less of that money over the course of the year and do other things with it? So I challenge you to think about it from both angles. I do not have a preference for either one, but large refunds probably mean we need to do some planning. Hi, Alexi. Good to have you here. So, but let's say you got it, okay? I want to run kind of through the number of things that would be useful to put in place if that exists. Hi, Megan. I cannot wait for my nephew to come. We got a couple more weeks. Girl, come on, let's do this. I'm very excited. All right, staying focused here. I saw Megan pop on, and so yes. All right, number one, do we have any debts that are hanging over our shoulders, okay? What do we need to pay? So making a list of all the debts that you've got and figuring out what's the balance, what kind of rate are we paying on these debts. So I'm talking about credit cards. Let's think about bad debts. There are good debts and there are bad debts. None of the debt is good, but there's debt that certainly helps you improve your conditions. And there's debt that does not help you improve your conditions, okay? Yes, I know, Megan, you are very ready. I'm excited. Actually get to see you next week. So student loans, credit card debt, personal loans, auto loans, those are the kinds of things that maybe you need to make a list of priorities what you're going to pay. I would suggest tackling that, the pay down or pay off of the debt from the standpoint of what's the most expensive one. Now, interest rates have increased recently, which is good in a way when we have our savings accounts growing, right? They're now paying us as high as 1.8%. But when we're paying more in a debt and we're not earning as much in a savings account, there's kind of like, disbalance a little bit. So how can we fix that? All right, so once if you found yourself that you don't have any debt, congratulations, awesome for managing your way through without it, or it's very little and it's not needed to be paid off or paid down, right? I know student loans is a longer term strategy for a lot of you, but I want to, if all possible, to get rid of that consumer debt, okay? Now, the next step, once we tackle that, would be to look at the emergency fund. And this is actually the advice that I gave my clients earlier today, the ones that had $25,000 in refund, is the first question I asked is, do you have an emergency fund? And they didn't. So the first step for them is they don't have any debt, so we can kind of cross that off. But they do need to set up an emergency fund. So now, some of you may already have an emergency fund in place, but guys, one of the things, and gals, one of the things to remember is that just because you have it doesn't mean that you don't need to replenish it, right? So the rule of thumb is 3 to 6 months worth of living expenses, okay? So take a look at what it's costing you on average to live, and that's how much times 3 months or 6 months, right? If you have more or less stable job, or if your job depends on you generating income or generating commissions, right? Then that needs to be larger. So once you've got that, right, that's one side, that's half the battle. The other half would be sometimes we tap into the emergency fund, right? Sometimes we need to use it, so can we replenish it? So if you're finding yourself having an extra money and not knowing where to plug it, can we replenish your emergency fund? I think for a lot of us, it's probably just, from very bottom scratch, starting from zero is to actually build it up. If you only get to 2 months, I am excited and thrilled for you, right? Let's work on building up higher. But at least we're going to start with that. All right, so we've got our debt under control. We now have some liquid savings, right? Because the debt a lot of times gets accumulated because there's not a place or resource for us to go and tap into and get funds when situations come up. All right. Now, I want to switch a little bit gears and talk about the longer term thinking, right? Remember I always mention on the money date, what are your savings goals? Okay? We never really talk about what they are because we need to do a little bit more of a discovery process to figure out, identify what they should be for everybody. And there are guidelines. Actually, a client today asked me about, well, what should on average, or what should be a general savings rate if you're contributing to retirement accounts? You can Google for that. There's an answer for every question. But when you're looking at your own situation and you want to know precisely what it needs to be, it's quite a bit of a complicated question because we need to work it backwards. I'm not going to get into it today, but I want to cover the area of the long-term savings. So I'm talking about whether it's college savings or retirement savings or things that are going to come up down the road, okay? what are you actually planning? So I guess the first thing is, what are you trying to accomplish? I'm going to focus on retirement because it's applicable to everybody. So do you have a retirement plan in place? The first question is, are you maximizing the contributions that are going into that retirement plan? Perhaps the reason you do have such a large refund, or whatever your refund is your retirement plan. Okay, so how about, sorry about that, I think my phone went off. So how about apping your contributions, right? So if I'm talking about the 401k, you can contribute $18,500 in 2018. All right, now for some of you that might be a stretch and say there's no way I can do that. Let's think about accounts such as IRA or Roth IRA, right? And there are different tax benefits when you contribute to those accounts. But still, it is something that's going to grow and accumulate for you for the long term. All right, so 401k check mark, IRA or Roth IRA check mark. Now, for some of you who may be already doing those things and are looking to maximize, right? Looking for ways to increase their contributions. So could you perhaps do something called a catch-up contributions? Because that's one of the ways to add additional monies. Now, there are different benefits, right? If you're contributing to a 401k with pre-tax dollars, that helps you save on taxes. So therefore, hopefully, that will not result in a huge refund. Now, with contributions that are going to a Roth IRA, that's a very different story because those monies already been taxed. So your benefit when it grows will be down the road when you take it out because it's going to be tax-free. So there's a little bit of trade-off. You have to agree and figure out what makes the most sense. Now, the last piece here is, if all of those accounts have been funded and you still feel like, oh my gosh, I've got money, I've got extra things to do, obviously, I would want you to enjoy some of it, all right? But let's think about other savings vehicles, right? We've got our emergency fund and then we've got our longer term goals funded, right? Could we do something in the middle? So think about the midterm kind of timeline for the goals that you have coming up. And I'm talking about perhaps saving in taxable accounts. We call these accounts taxable, so it would be like a brokerage account where you could buy all kinds of investments. This is when we're getting into investing in stocks, bonds, and anything that grows higher. Hi, John. Good to have you here. Grows higher and faster than the savings account. So what can you do, right, with that money that will get you closer to your goals, right? Now, I'm not going to give specific investment advice because this is not the session. I just want you to think about the strategy, right, for what can you do with this extra money that you got. So I hope this was helpful. For those of you hopping on at this point, I'm about to wrap this baby down and head out to dinner. But let me know what, remember to think about your money wins. Let me know what you're planning to do with your tax refund if you've gotten one. If you haven't gotten one and you need to pay extra taxes this year, this is a discussion for our next session because there's obviously also planning strategies, and it's almost like a reverse of what I talked about today. Contributing to a retirement plan, right? And doing some of this back-end planning could help you get there faster. Hi, Inga. Good to have you here. So let me know what you think. Drop a comment in the chat. If you guys found this helpful, please share it out. Thanks so much for watching, and I'll see you next week.